Good afternoon. It is Thursday, August 18th, and this is Trading with Teddy. A couple things went down in the last couple of days. We had the Fed minutes released yesterday. What they were indicating is that the economy is now strong enough to potentially consider raising rates. Now say that out loud again. Pathetic doesn't do justice to what these guys have been saying and doing. I mean, we have heard this at least 100 times over the last 4 or 5 years. So their credibility, in my opinion, I think most people's opinions are completely and totally shot. So you take that with a grain of salt. That's my perspective. Disregard anything they say. I think right now with what we have gold, with where gold is, we've got it right up near 1360. This is a level that is held in 4 or 5 times over the last month and a half or so. This is the long-term bear trend line from the 2011 highs, and the market is clearly all over it. You know, if you're a bear, this is an unbelievable spot to sell. You know, your risk parameters are really tightly confined, easily defined. So right above 1370, 1380, kind of a stop. You know, for us, we're very bullish. You know, technicals. You know, gold and silver are so technically driven. You know, these levels are huge. They're followed so closely by so many of the big shooters. You know, big funds, big players in the market. So that's why we like it. We've been knocking on this door for a while. You know, we ultimately believe, you know, a market like this knocks on a support or resistance level. It's going to pop at some point, and everything around the price action has been strong for the last, really all year, and it's doing nothing to change our opinion on that. So the other day also we had the GVX, the gold volatility index, reached 2-year low. So that's pretty interesting. That tells you the gold's been stuck in a range for a bit of time. But we get through this 1360 level, you know, look out. 1450 easily in play. You know, we did have 1380. That's an interesting level too. I'm not sure that it's going to be as interesting because 1360 has clearly flexed its muscles. That's a 38.2 Fibonacci retracement from those 2011 highs to the lows last year. So 1380, maybe there's a little bit of hesitation to get above there, but ultimately 1360s are the driver, and we look for gold to pop through there in a big way in the coming sessions. With that said, it sounds like I'm talking out of both sides of my mouth. It's kind of an interesting play for the bears to sell it right here again because the risk is so easily defined, and it's not a whole lot for what you'd be looking for maybe to the downside. Ultimately, though, we love it to the long side. These are my thoughts and not those of ADM Investor Services or Archer Financial Services. Thank you.